Hello. Alright, folks, let's start our lessons with Accounting 101. Here with me, Zakaria Yassin, and we are following a lecture provided by Inage TV. You can find more on these lectures on www.enejca.com. You can also find us in YouTube and Facebook. Alright, so this is the very basic lesson on accounting. Today we will be learning on the accounting equation. Before we get on to that equation, we will learn something on the terminologies, the very basic terminologies used in accounting. The first terminology which we will learn is the asset. So basically, we will always hear something on assets, but actually, what is their definition? What are these assets? Whom do we call assets? So there are a lot of definitions on assets, but here to start with, we are providing a very basic definition. Anything that can be used for a period of less or more than 12 months to generate future economic benefits is the assets. We can use this for a period of less than 12 months or for a period of more than 12 months to generate future economic benefits. Okay, so these assets are divided in two ways. One is the current asset and another one is the fixed asset. The current assets are those assets which will be used by the business for a period of less than 12 months. Fixed assets are the assets which will be used by the business for a period of more than 12 months. Alright, so let's name a few examples of current assets. Current assets might be cash because you cannot store cash in money bag for a period of more than 12 months. If you have cash in your hand, you will be using it up, and it is assumed that cash is used between a year. Same, you have inventories, you have stock. For an example, let's take another example. It might be pen, pencil. These are our assets because we are buying these assets by money, but we are not intending to hold them for a period of more than 12 months. So this will be used up within 12 months. Now coming back to few examples of fixed assets, what we have is car, bus, buildings, plant and machinery, computer. Suppose for an example you bought a new laptop. What do you think? Will you use it for a period of less than 12 months? No. When you bought a laptop with maybe 350 pounds, you thought you will be using this for a period of 1 or 2 years. Now, the next very important terminology in accounting is liability. So, what is a liability? Liability is anything when we will owe something to someone, we have a liability. Like if you take a loan from a friend, then you have a liability to your friend. You can take out loans in cash, you can take out loans from banks, so those are your liability. So here again, what we need to know is, or we need to be careful that when I take a liability, I actually increase my cash. That is, I actually increase my asset because I took a loan from a friend. I took a loan from a friend in cash of 30,000 pounds. So what happens is I increase my cash position and again I increase my liability. My liability is 30,000 pounds and my asset increases by 30,000 pounds. So we always have to be very careful about this thing, and we have to understand this logic. You might have a liability, you might increase your liability, but again on the other hand, you are increasing your cash position, that is, you are increasing your assets. All right, another very important topic, very important terminology, very important part in accounting is what is capital. You will always hear this term, and this term is used interchangeably in our daily life. But what actually is capital, or for the basics of accounting, what is capital? Anything that the owner brings into the business is capital. This is the very basic definition of capital. Anything the owner brings into the business is called capital. When does he bring it? At the start of the business. When he is starting his business, he must bring in some cash or some other kinds of assets. So that is capital. Again, you can bring in capital in the form of cash or in the form of other types of assets. Mr. X wants to start a business. He might bring in cash, or he might bring in furniture and other decorations from his home. So these both will be classified as capital. So when we are bringing in capital, like I bring in cash 50,000, so this 50,000 is my capital. What we need to focus on is this 50,000 is also my asset. So when I am bringing in capital, my capital position is raising. Again, my asset position is raising. We need to be very careful on these situations. Alright, I hope you got the very basic ideas. So now we will be learning the accounting equation. The accounting equation is the most important thing when you want to learn accounting. So here what we have: asset equals to capital plus liability. Asset equals to capital plus liability. But let's see how we derive this equation. Alright, so I have designed this exhibit to explain you the very basics of the accounting equation. Mr. Z started his business by bringing in cash 60,000. Okay, so he brings in a cash which is an asset. Again, whatever the owner brings at the start of the business is a capital. So what do we have here? We have asset 60,000 and capital 60,000, right? Okay, so let's devise the equation. Asset is equals to capital, 60,000 is equals to 60,000. Alright, so we got an equation here. Asset equals to capital. Alright, after 2 months, Mr. Z needs more money. After 2 months, Mr. Z needs more money. So he asks his best friend, Mr. R, to lend him some money. His friend agrees to lend him 20,000 cash. As we have discussed, cash is an asset. So again his asset is increasing by 20,000. And to balance the equation, we have our liability. When we are taking out a loan, that means we have a liability. As we have discussed today, liability is something we owe to someone. We owe to someone. When we owe anything to someone, that is our liability. So let's see what happens. We had a cash of 60,000 in the beginning, and we had a capital of 60,000, and that time the equation was asset equals to capital. That time the equation was 60,000 equals to 60,000. Alright, now when I have taken out the loan, that was 20,000. So what do I have? Actually, I had an asset of 60,000, and now that increase by 20,000. Now I have total 80,000 in my hand. So I have an 80,000. But how do we balance the accounting equation? The accounting equation we have is assets equals to capital. 60,000 to 60,000. But now the asset has increased by 20,000 and the total asset figure is 80,000. So I will need to increase this 60,000 by another 20,000, and that we will call a liability. Alright, so here we get the equation 80,000 equals to 80,000. So we get the main equation in accounting: asset equals to capital plus liability. Okay, whole throughout our accounting journey, the journey of studying accounting, we will always need to remember this: asset equals to capital plus liability. Hope you everyone understood the lecture, and in case you need to know more about accounting, more on these issues, more on the tougher issues, you will please always log on to www.enejca.com. You will always find more and more accounting lectures here, and we will be helping you with more and more lectures in the future. So this is Zakaria signing off from Inej TV. Thank you very much. Hope to see you in another lecture.